So with the stock market going down quite heavily at the moment and being in a very deep bear market, there's very little place to hide with your money. And of course, as much as us long-term investors might want to stick to the stock market, at the moment, things are in the red. Potentially at the moment, you've got a cash pot, which might be sat on the side, or also as part of your emergency fund, certainly like I do at the moment with just cash sat in my current account. So I wanted to do this video to cover off some of the alternative things that we can invest in, other than going into the more riskier stocks and shares, certainly in the short term. So let's jump into 5 different uses of your cash, whether that's your emergency fund or cash put on the side, which you don't quite want to invest right now into the stocks and shares or different companies out there, or even index funds. Let's start from the top. Up first, let's talk about premium bonds. Now, this is run by National Savings and Investments and is essentially some kind of hybrid between a guaranteed savings account and a lottery. So I think everything will make itself clear in just a few minutes. As you can see on their website, you can start investing from just £25 and you're allowed to put in up to £50,000 in total. And effectively, this is a kind of lottery where you can put money into and there will be draws every single month with your expected rate of return being 1.4%. And there is a big caveat there on the expected rate of return. There is no guaranteed interest here and nothing is guaranteed at all. However, your money is protected by the government because essentially National Savings and Investments is backed by the government. So 100% of your money is secure. So you have no risk leaving your money with them. A couple of positives here, of course, as you can see on screen, those returns will be tax-free, which is pretty nice. And then you can also start saving for those under 16. So if you've got a bit of money set to the side, you can also get the kids involved too. It's a bit of fun. And one of the best ways to describe this is probably saying it's basically the lottery and you're playing it every single month, but you're not losing that stake. You're not losing your £2 on your ticket. And you do have a chance to get multi-million-pound prize draws and do that every single month. However, the chances are very, very low, so make sure you have a little look on the website because to win those big prizes, you're looking at some seriously unfavorable odds when you probably might even be better off playing the lottery itself. Another thing which is really important is that you can get your money out pretty quickly too, which is one of my key things for any of these kind of investments, to make sure that you can access your funds and get it back into cash pretty quickly. Now, huge shout out to the compounding investor because he actually does have £50,000 in premium bonds. This is another UK-based finance creator who has a really nice FTSE 100 portfolio that pays lots of dividends to him, and he uses premium bonds as his emergency pot, which he can draw upon, and he's done relatively well, but the risk is, of course, that you can have many months and if not years of getting no money at all. So my biggest downside for this one is the opportunity cost. Yes, you might get 1.4% back in the year, but of course that's still going to be a very much negative return as everything we're looking at the moment with the rate of inflation. So it's a good opportunity here. It's better than sitting in a bank account probably, but there is a risk of the opportunity cost where that money could go. Coming up in second place, a very boring topic, no doubt, and something that hasn't been given much love over the past decade or so with those interest rates being so low, and that is high interest savings account. Because unfortunately, I think a lot of the companies offering high interest savings accounts have been taking a lot of people for a ride with kind of sub 1% per year back in terms of interest, or even 0.01% or something like that. They've definitely been severely lacking in this current environment. However, they are coming on the way up as those interest rates and the base rate gets risen by the Bank of England. We are seeing some better rates for savers. Now, one I will highlight and one I've done some videos on my channel is Chase Bank's UK account, which you can get and pretty much easily sign up for. There did used to be a sign up bonus. Unfortunately, that one's gone now, certainly as for me for a referrer. And for this one, again, you're going to get a similar interest rate, 1.5% interest per year, but it is up to £250,000, which is very, very impressive because looking at some other high interest savings account, they would offer these very big rates, but they would say they'd be capped at £1,000 or £2,000 or something like that. And that would be very, very poor in terms of returns. Now, I know there has been some more competition in that space. I think Virgin have got a good account at the moment, and there are some other ones that you might want to lock your money away for a longer period of time. But I think Chase have a good setup at the moment because that is completely flexible. You can just move the money into it, have that account there, and of course move that money back if you do need it. So it might be better than getting nothing. Again, with all of these, it's something rather than nothing. So don't forget to have a look on my channel for that one. We have 2 videos there, one on the initial look at the product before I got my hands on the card, and then one 6 months down the line, because I think there are some pros and cons on the account, but this is certainly one of the big spending points. Now, this third one's going to be probably the riskiest one and a slight curveball, I would suppose. Peer-to-peer lending. Now, this is going to be one where there is going to be risk involved, but you might want to look into this if you're looking to get a little bit more money and have an alternative investment rather than stocks and shares or just holding anything in cash. So you may have seen quite a lot of these platforms pop up, and effectively they allow you as an investor to put your money into a pot and then they will lend that out on a secured basis to different businesses. And By secured basis, of course, that might be tied up against stock or property or anything like that. If you want more detail, you're going to have a much deeper look into accounts like this. The one I've got up on screen now is called Assets Capital, so you can have a little read around there. It looks like they offer various kinds of accounts depending on how flexibly you want to be able to access that, and saying earn a target interest up to around 4%. Again, it's not going to cover off inflation, it's not going to beat inflation, but 4% versus 1.5%, it's going to be up to you to make sure you're comfortable with that level of risk. Now, a clear caveat here, at the end of the day, although this company is protected by the Financial Conduct Authority, there's no recourse here to the Financial Services Compensation Scheme, which is your £85,000 coverage that most bank accounts and most institutions actually get covered by to protect your cash. Here, this is certainly a more risky one, but from what I can see with organizations like this, it seems like they've done pretty well during times like this. However, of course, I think if there was like a significant downturn or lots of people went bankrupt or the value of the secured assets could go down, anything could happen. But I just wanted to highlight it as something you could do and something that you might want to look into yourself. Next up, the lifetime ISA. Again, it's probably not the most exciting topic and not something that you get brought up much on YouTube with the UK investors, but there is an account here that falls into the different ISAs that you can have available in the UK to get a bit of free money from the government in two different scenarios. So as you can see on screen now from the government website, you can put £4,000 a year into your lifetime ISA, but you've got to start contributing before you're 40 and you can't contribute after you're 50. But on a positive note, you do get a 25% bonus from your savings up to a maximum of £1,000 per year. So if you did max it out and put in your 4,000, the government would top up the other 1,000 and you'd have a £5,000 pot. However, here's the caveat. So you can only withdraw it for two reasons, otherwise you will have penalties. And that is if you're buying your first house or if you're age 60 or over. So this is either something to get you on the property ladder, or this is something that's going to help you in your retirement. So there's two quite very specific use cases there. And of course, the third one, unfortunately, if you are terminally ill, you can get that money too. And of course, you can't be a multi-millionaire and get that one. There is some caveats here as well. The property does have to cost less than 450k, but I think you should be okay most of the UK with that one. Now, a couple of more things to highlight here is that although we're predominantly talking about investing and keeping this with cash, inside your lifetime ISA, you can actually do stocks and shares. This might be very good for a retirement account if you're definitely planning to do long term, or if you wanted to start saving for a home pretty early on, again, that might be quite good. But just for a couple of years, you definitely want to be very careful there because the stock market in the short term could do anything. But that is certainly something quite interesting that you could do, or you can just leave things in cash and take that 25% bonus when the money goes in. Now, final caveat to this one is that that money that you put into your lifetime ISA does come out of the rest of your ISA allowances. So remember when we talk about saying you've got a £20,000 tax-free limit for your stocks and shares ISA, technically that's a £20,000 limit across the different ISAs. So if you did put £4,000 into a lifetime ISA, that would mean that you'd only have £16,000 left to put into a stocks and shares ISA. But I realise when I say the words only £16,000 a year to invest, that's only really going to apply to a very small percentage of people. So most people would be happy with these limits, and most people might do quite well using a lifetime ISA to either get them on the property ladder or as a little hack to get some extra money for retirement. Now, this one also might be considered a bit of a curveball, and one, again, which probably doesn't get brought up a lot when we're talking about investing. And I certainly don't want to tell people how to suck eggs, but if you do have any heavy debt and any high interest debt, then paying off early in a time like now when the markets are seemingly down and you may want to avoid investing, or if that's how you currently feel, paying down that high interest credit card debt is literally a way to guarantee solid returns. I mean, if you think about this, if you've got a credit card with 15% interest on it, and let's say you've got £2,000 on that credit card, then you'd have around £300 interest in that entire year. So if you were to pay it off in a couple of months, you could save yourselves around £250 or so. So that would be a guaranteed rate of return by paying off that high interest debt. Now, you could also look at paying off other debt like mortgage debt, but then of course that's going to defeat the object of having cash in an emergency fund, and that's going to tie things up into your house, and your home and your mortgage is likely going to be on a very low rate of interest. So that would completely defeat the object. However, saying that, there's been some great channels on here and some great stories about people paying off their mortgages early, but that's really only to get away that peace of mind knowing that your mortgage is free and clear, when it might not make sense from a financial perspective or an investment perspective, but it makes sense more from an emotional one. So have a look at the finances. Just check if you've got any high interest debt out there, whether it's for your car, credit cards, or anything else that's lapped in your back end. So have a little look there, because at the end of the day, if you can pay off 15% interest or even more or even worse out there, that's effectively the same as getting 15% return in the stock market, which in the current climate, you'd definitely snap your hand off for. So I hope that's kind of sparked some imagination there. The only downside with all of these, and I think in the current scenario we're in, at the moment with low interest rates and high inflation, there's almost no way that we can beat and get real returns. And when I say real returns, of course, we need to actually get returns which are in line with or exceed inflation. And with inflation running over 8%, pushing close to double digits at the moment, the challenge you've got is there's almost nothing out there which can return that level of interest to you, certainly guaranteed in a year. The closest you're going to get, of course, is about 1.5% in the short term. In the longer term, though, for the much longer investor, there are definitely rewards out there. As we know, the stock market has returned on average 10% for many, many years, going back to a century, but that is only over the long term. Absolutely anything can take place in the short term. If you were interested in what I do at the moment, I just do keep my cash in my current account. I keep a very small emergency fund just to keep things going. I don't have any war chest that I try and time the market with or anything like that. So very much I'm always invested. So remember to make sure you do plenty of your own research into all of these things. Again, this is all just my opinion. I'm not a professional financial advisor. These are just some thoughts to inspire you, different things you could potentially do with your cash if you are sat there itching away thinking, I really want to get some more returns rather than basically nothing from your current account. Do plenty of research, look into what suits you, whatever's going to work best for your circumstances. And at the end of the day, personal finance is just that. It's personal. Anyway, thanks so much for watching and happy investing.